DEX just cracked CoinGecko's top 41, and the chart is coiling so tight that traders who miss the next 72 hours are going to be explaining it to themselves for months. Here's the thing about rank 41. It sounds arbitrary, right? But in crypto, there's a very real attention threshold around the top 50. That's where algorithmic screeners start pinging. That's where fund allocators running DeFi mandates start doing diligence. That's where the retail FOMO machine begins warming up its engine. DEX just crossed that line, and the price hasn't reacted the way you'd expect yet. That lag is the opportunity. Let me give you context on why this matters specifically right now. DeFi as a sector has been quietly recovering through Q1 and Q2 of 2025. Total value locked across major protocols has been climbing back toward the highs we saw before the rate hike cycle crushed risk assets. On-chain activity is up, wallet creation is accelerating, and capital is rotating out of Layer 1 bets and into the infrastructure and tooling layer, which is exactly where DEX lives. The timing isn't coincidental. Projects like this tend to catch their bids when the broader DeFi narrative reactivates, and we are watching that happen in real time. So what actually is DEXE? Because if you've just seen the ticker trending and you're trying to figure out if this is another dog-themed nothing burger, let me be precise about what makes this protocol different. DEX is building decentralized asset management infrastructure. That sounds dry, so here's the analogy that actually makes it click. Imagine if Fidelity's fund management backend, the part that lets portfolio managers run strategies, attract capital, and distribute returns, was rebuilt entirely on-chain, without a single point of custodial control, accessible to any wallet anywhere on Earth. That's the core of what DEXE is doing. Skilled traders on the platform can tokenize their strategies. Regular users can allocate to those strategies automatically, the same way you'd copy a portfolio on eToro, except there's no company holding your assets, no counterparty risk, no withdrawal gate. The protocol handles it through smart contracts. Now layer on top of that what's actually been getting institutional attention: the DEX DAO infrastructure. The protocol has developed governance and insurance tooling that other DeFi projects are starting to use to manage their own on-chain decision-making. That's a B2B revenue layer that most retail investors completely overlook when they're looking at DEXE. You're not just buying a copy trading token, you're buying into a protocol that's becoming governance infrastructure for other protocols. That's a compounding network effect that takes time to price in, which is exactly why windows like this exist. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Let's talk price. DEXE is currently trading in a range that, technically speaking, has built a significant base over the past several months. The volume profile shows accumulation happening at these levels, meaning patient buyers have been absorbing sell pressure rather than letting price collapse further. When you see that pattern resolve, the move tends to be fast, and it tends to leave people who are waiting for a better entry behind. Realistic near-term target on a clean breakout from this range sits in the range of 2 to 3 times current price. That's not a moon call. That's just what the measured move looks like on the chart if volume comes in and confirms the breakout. Longer term, if DEX captures even a modest share of the decentralized asset management market, which some analysts have pegged at a multi-billion-dollar TAM by 2026, the protocol's token value could look very different from where it sits today. The comparison point people keep coming back to is early UNI or early AEV, protocols that looked expensive at $3 and looked cheap at $30 in retrospect because the market hadn't priced in the full utility yet. Whale wallets have been adding. On-chain data shows the top holders increasing positions over the last 30 days rather than distributing. That's not a guarantee of anything, but it tells you the people closest to the protocol's development are not selling into this consolidation. Now the risk side, and I'm going to be straight with you here because this is your money and you deserve the honest version. DEXE is not a finished product competing in a finished market. The decentralized asset management space is still early, which means it's still uncertain. If a broader crypto bear leg hits in 2025, and nobody can rule that out, Mid-cap DeFi tokens like DEXE tend to take outsized drawdowns. We're talking 60, 70, even 80% corrections are not off the table in that scenario. That's the nature of the risk-reward in this part of the market. Additionally, copy trading and social trading are competitive verticals. There are centralized players with massive user bases and marketing budgets. If decentralized alternatives don't demonstrate clear UX advantages, adoption could be slower than the bull case assumes. And finally, token unlock schedules always matter. Any large unlock event hitting while momentum is fragile can create significant overhead supply. Do your own research on the DEXE vesting schedule before sizing a position. So here's my actual take. DEXE is one of the more interesting risk-on setups in the current DeFi rotation. The fundamentals are real. This isn't a meme, it's not a fork of something else, and it's not solving a fake problem. The technical setup is coiling toward a resolution. The timing relative to the DeFi recovery narrative is favorable, but this is a swing trade or a speculative long-term position for a portion of a portfolio, not a go-all-in mortgage the house situation. Size it appropriately. Watch the volume on the breakout, and if it doesn't confirm, there's no shame in walking away and finding the next one. Subscribe to Crypto Sayins. We post breakdowns like this every week, so you never miss a move. Hit the bell too, because in crypto, being 48 hours late to the information is the same as being too late.